I've got a couple of K1s from different states, and after it kind of got into that area, I thought, I'll just pay someone to do it and make sure that we do it right. But the taxes are an important area, and we need to understand it. Remember we brought up this little chart? Remember our example about you're paying back the loan? What was your largest single expense? Was it principal? Was it interest? For the amount of money that you have to earn to pay back that loan. Remember what it was? We'll show you the little chart here. And this is just based on this information here. Notice your principal was $1. Interest was $1.50. But notice your taxes, in this case here, it's almost more than your principal. So if taxes are that high, should we spend the time to understand them? When I was going to school at George Washington University, there was 2 bridges that could go into the city. One was I-66, and it was a toll bridge. So if you wanted to go across that, you paid the toll. Or you could go down to just before Crystal City, there was another bridge over by National Airport. And that was free. You had the choice, you could pay the toll, or you could go down and you could go across the bridge. So the key is what you need to do is you just need to understand. We're required, the prophets tell us we're required, we should pay every dollar we owe. And not a penny more. And if you're like me, who's paid $6,000 in student tax, it's important that we learn that. So the question is what's the process? Well, let's step back. What have our leaders said about taxes? What's been our leaders' counsel on taxes?
I mean, if you go to the New Testament in Christ, the people came in asking whether you should pay taxes or not. And that was when they caught a fish in the lake and had a coin in its mouth. No, wait, I'm mixing up my parables.
But that's all right.
Anyways,
at least they're on the right way.
He said to render unto Caesar's that which is Caesar's.
Okay.
Because, that's what lies.
Yeah. What does the 12th article of faith state? That's the kings, presidents, rulers. So we're under a mandate to obey. Do you have to pay more than you owe? The answer is no. What areas are affected by taxes? Does tax policy impact what we do? What areas are impacted by taxes? How about kids? Child tax credit. Number of other ones. What other areas?
Retirement investing.
Retirement?
Even when you die, there was a few years ago when the estate tax was gone for a year, and the first week of that year and the last week of that year, and more people died those weeks. They would hang on and then die the next year so that their estate would be taxed.
That's called the year to push Grandpa out of the live judge. So, there was a lot of people, those people who died in that year. Other areas that taxes impact. Yes?
Institutions, like charitable institutions.
So giving, does it impact saving? Yes. Go ahead. Home ownership?
Investing.
Investing? Education? So all of these areas are impacted by taxes. Now here's the final exam question. What areas are not impacted by taxes? What areas of our life?
Oh, I just saw something interesting the other day. An article about how the NFL was tax exempt up until like the last year. And they're like a $10 billion entity. entity, so they weren't taxed for a while.
Are they still, sports, there's still sports? Does that impact it? We have to pay taxes on our tickets. Do they have to pay taxes on that? I can't think of an institution that doesn't pay, the tax policy does not impact. And so if it's that pervasive, we really need to understand it. You know, it's interesting. I spent time in Nauvoo. And anyone go see the sites in Nauvoo? You see all the houses in Nauvoo? Did you ever notice the size of the closets? That's how boring I am. I actually notice things like that. But you go into these little houses and they have like 14-inch closets. Any idea why?
So I think it's because when they calculated property taxes, they would do it based on whether or not they had a closet, and so that would define what a bedroom is, and that still does in real estate. Oh, how many bedrooms does it have? Well, it has to have a closet to be a bedroom. So they wouldn't put closets in their rooms, and they'd have a wardrobe instead, and that way they didn't have to pay as much taxes. But they've subsequently probably gone and put in small closets because that's all they can fit.
Right, so my sense too is anything beyond that 14-inch was considered a new room and you'd have to pay taxes. You know, Joseph Smith's time, his dad, what they did is they built a house on the county line. We actually know which side of the house it was built on because we know where Joseph Smith was born. And that way people could pay the taxes on the county that has the lower taxes. So it's just interesting how the tax policies and the impact on tax policies that it's had. So our point here is we really need to understand it. We really need to understand tax policy. Anyone heard of Tax Freedom Day?
Yeah.
What's Tax Freedom Day? So Tax Freedom Day is the day you stop working for Uncle Sam and the day you start working for yourself. Has Tax Freedom Day, are we paying less in taxes now or more? You can tell by the Tax Freedom Day. And we're actually paying more taxes. So it's somewhere about April 10th or 11th. You know, so again, if it's that much of an impact, if we're working basically a quarter of our time just to pay our taxes, we probably should understand. So let's talk a little bit about the federal tax framework. What's the process of it? Because what we're going to have to do this. Again, accounting students, please do not read too much. Don't laugh too much because it's so simple. We're trying to make it easy to understand. Again, on the quizzes, the accounting students tend to miss them because they read too much into them. Okay, so we start income from all sources. And then we do less exclusions and deferrals. For example, a 401k is an exclusion. It's also called, I think the accounting students call it above the line. So we'll do that. And that gives us our gross income. Then we'll subtract our adjustments. The adjustments would be things like an IRA. That would be a below the line adjustments, or a flexible spending account, or things like that. But that gives us our adjusted gross income. And then we've got two ways of calculating. We can use the standard deduction, which is the government in all its wisdom has decided that it's $12,600 per family. Or you can itemize, which is basically your situation. Ever since I bought my first home, after that it's always been more advantageous for me to itemize. So standard deduction is $12,600, or you can itemize. And whichever one has you pay less taxes is the better one there. Minus your exemptions. Your exemption is a specific amount of money per person that the government allows you. And then from that we come up, that equals your taxable income. From your taxable income, you look the tax up on the tax table, and then you get your tentative tax. Then you subtract any credits. So deductions are on the itemized side, and credits are in the credit side. Which is better, a credit or a deduction? Credit. And why? Dollar for dollar reduction in your taxes. So for example, my wife and I did service this year in Nauvoo. Could I deduct that from my deductions? So it's volunteer service. Now, if you itemize, you can't.
Not the value of the service.
No, but we can, our food and our transportation and our room and board there. So, does that mean that the government basically paid for all of my work there? So if we had $1 there, to say it cost me $1 to be there, and my marginal tax rate is 15%, how much did I actually save from those? 15 cents. So I still had to put out the 85 cents there. Now with a credit is dollar for dollar. So if I give you your total tax owed minus taxes already paid, gives either the amount due or the refund. So let's just kind of go through a few definitions. Gross income, it's not gross because it's so small. It's gross because it's all together there. Exclusions, contributions to qualified retirement plan. So for example, an IRA. Or a 401k or a 403b. These are contributions there, so that would be an exclusion. Notice life insurance proceeds. Grants not in excess of college expenses. So if you get a grant for $5,000 and your college expenses are $7,000, do you have to pay taxes on that grant? No. Let's say you get a grant of $5,000 and college expenses are $3,000. Then you have to pay $2,000 of that as part of your gross income. Also, interest for education savings vehicles used for education. So interest on my 529 plans or education IRA. You'll learn about those. We'll talk about those in a bit. So those are also deferred. Those are also exclusions from your income. So that gives us our gross income, and then we make some adjustments. So qualified medical savings contribution, any flexible spending accounts. So I went in and I had my teeth cleaned yesterday. And so I paid for that, or at least I tried to pay for that with my flexible spending account, but I'd already spent it. Our family already spent the money, but you can play for those type of expenses with pre-tax dollars. Contributions to individual retirement accounts. And again, these are below the line here. IRA, any contributions to your health savings accounts. And a number of these, student loan interest, tuition and fees, deductions, and some net capital losses too. Yes?
Just a note, and probably a lot of people know this, but you can either take a deduction or a credit for an expense, but not both.
Okay.
And so sometimes it's better to take for your tuition and fees an education credit later on.
So that's why it's nice to pay people to kind of look over it. What I used to do is about every third year I'd pay someone to do it, and I just wouldn't let them do it. I would actually sit there and have them talk to me and tell me what they were doing as we go through it. I walked into this repair place. He says, repair, it's $60 an hour. If you watch, $70 an hour. If you make comments, $80 an hour. If you like, $90. So I like to work with people who will let me just sit there and talk. But it's important to get help. This little thing that I did that, it cost me, $100 and I saved $3,000. It was a good investment. Then what we do is we've got what you do is you either your standard or your itemized deduction. So your standard deduction again is the IRS and all of its wisdom coming up with what they think each family should spend. So right now we're at 12.6. And then you can itemize the deductions yourself. Again, in my experience, which is limited, once I bought my first house, it was always better for me to itemize. Because mainly we had that home mortgage interest. And even right now, even though my house is paid for, it's still better for me to itemize. So charitable contributions. So if you itemize things like your tithes and offerings. If you itemize every time you go to DI and you turn in a bag of clothes. I've got lots of kids and they're all growing up. But the important thing is you get that receipt and it's signed receipt, and then you say, okay, what's the value? Usually I take the value of about 1% of the value. If it costs $100 to buy it, probably was about $1. But that's what we do. And so you can actually keep those receipts and that can be reimbursed. Mileage. Anybody serving the young women or the young men? Go to scout camp or girls camp or things like that. That mileage can be deducted. What you want to do is you just keep a record of it. I used to be a dry council speaker, a high council speaker in Oakland State. And twice a week I would go. Once a week was for meetings and once a week was the speaking. And so I just, 26 weeks, or 52 weeks times twice a week times, 40 miles. And I would deduct that from my taxes. Medical expenses. Notice that medical and unreimbursed qualified job expenses, these are as a percent of your AGI. So the government is saying that, okay, you can deduct these expenses, but only if they're above a certain limit. So we can see those next three have limits. And then state and local taxes or general sales tax, whichever one. Everybody's what you owe. So once you take out your deductions, realize your mileage deduction. Charitable is 14 cents a mile. Business is almost 58. Moving or medical is 23. So what's the government trying to emphasize? Now, they will allow some for charitable, but realize most of that comes from much higher amounts for business and moving expenses. Exemptions, it's the amount that you're allowed for each qualifying individual in your household. I can't remember what it is, what considers a qualifying individual. I think you have to be there a certain amount of time. I know my father-in-law was with us like the last 10 of the last 12 months of his life because he started in 1 year and he passed away in the next and he missed, we never did fill it out, even though that's not the reason we had him come. But it was kind of an interesting thing here. So just be aware. Children, they're an exemption if they're independent, if you are responsible for a majority of their expenses and they're considered, you can use them as exemptions. And there's an age limit as well. And then the tax tables. Notice we have a progressive tax system. So if you make your taxable income is $18,450, you're only paying 10%, and this is your marginal tax rate. If your taxable income is $70,000, what's your marginal tax rate? Taxable income's $70,000, what's your marginal tax rate? Yeah, 15%. If it's $75,000, 25%. And more than that, it's 20%. So that's how we kind of determine. But you figure out your taxes. Again, if let's say your taxable income is $50,000, you'll pay 10% on the first $18,450, which is this here, plus 15% of the difference there. And that's kind of how the tax tables work. And then credits. Again, dollar for dollar reductions. These are a lot better. They're either refundable or non-refundable. And if they're refundable, you can get that back regardless of your tax bill. Non-refundable, you can only get it back up to the amount of the tax bill. And then what I thought we'd do here is we just put, these are the main tax credits that students use. Any other ones up there are Mac students? Any other credits that you think we should discuss?
I mean, the child tax credit.
Oh, yeah. If you can do that one. Other ones? Clark?
I don't know if tuition fee is actually limited to 4,000 as a deduction.
Okay.
Is it? I think that any direct tuition expenses.
I think it is.
I don't think there's a limit. Is
It
there?
is.
There is a limit.
Yeah.
I thought that.
Not for the lifetime learning credit, but for the deduction.
I know there's for the ASC. Maybe I'm wrong.
So about if you guys,
I thought you were referring to.
Yeah, not for the AOC, but for deducting it as a 4AGI deduction.
Oh yeah, I don't think
There's no,
that.
okay, you're going to send me a note on that? I'll change the slide. Okay, so how many people here have never done their own income tax? Raise your hand.
Does TurboTax count?
So let's do, well, okay, so you kind of know the situation here. Let's talk a little about what are the strategies for reducing taxes. Because that's really what we want to do here. So why don't we spend a few minutes in your group? Why don't you come up with a couple of strategies, and then let's talk about those. The good news about talking to this group is that guys will come up with things that we've never thought about. Take a couple of minutes.
Jordan, can you picture this?
That's right.
We did that. It was like, because I did it for him and his wife. It was like, they got all that. Because otherwise,
To reduce our taxes. For a lot of, we had a lot of discussion there too, I'm sorry. So what can we do to reduce taxes?
Offshore bank.
Offshore bank account, I mean, that's good. I'm sure most people here can actually put one of those up. You know, but you can enjoy it for a while. You know, you might have a few problems. Other thoughts? Mark?
Depending on your circumstance, you might want to accelerate or defer income. For example, I'm going to be going to a large accounting firm, and I give a bonus if you pass your CPA exam within the first year. But I'll only be working for a few months that first year.
Okay.
So I want to make sure I get that bonus that year because I'll be in a lower bracket than if I were to get it later.
Okay. Good. Matt?
You can do things like paying your tithing with appreciated capital gains.
Pay your tithing with appreciated securities.
Yeah.
I just did that a little while ago. So Learning Tool 7 gives you an example of how to do that. What you'll do is you'll call a brokerage house, you know, that you have the securities with. These cannot be retirement securities; they're in taxable accounts. You just say, I'd like to donate this amount of shares to this charity. You can, in our case, it would be the Church of Jesus Christ, Corporation of the Church of Jesus Christ of Latter-day Saints. And you can call the church number, and you can get the account numbers of these brokerage houses. And then they'll transfer the shares, and then about 3 weeks later, you'll get a note that says donation in kind received. So what's the advantage of donating appreciated securities?
No taxes.
So it's worth, I paid 5 for it, it's worth 10. If I donate it, what kind of a deduction do I get on my taxes? Yeah, 10. What does the church recognize that at? 10. What happens if I sell the shares for $10 and then pay my tithing? What's my capital gains on that? $5 times by 15%, so I have 75 cents. And then that I have to pay taxes on. So donating appreciated securities allows you to take advantage. It's one of the few loopholes we have left.
I was just going to say the 4,000 is correct.
Okay, thank you. Other thoughts?
Another thing you can do with like charitable contributions is like prepay if you want.
Okay.
Like alternate between taking standard and itemized deductions.
That's right. I've had friends who pay their tithing, prepay their tithing, so they'll pay 2 years of tithing in 1 year. Then they get that in the next year they'll have it. Other thoughts? As I look at this, I've divided the 4 areas. Number 1, maximize deductions. Your home is a tax shelter. Really, you can deduct the interest payments. Maximum benefit. You know, we're going to give anyway. We pay our tithes and offerings, but might as well get the tax deduction. keep good records. So that's why I like things like mint.com and Quicken. So you can actually you have very good records. So once a year I'll sit down around April 14th and I'll print off my charitable contributions and then I just use that as inputs into the decision. Help the moving expenses.
Just a question on the mileage for charitable organizations. You mentioned like scout camps, things like that. Would you have to be doing some sort of service, not just a personal worship, but some sort of service that you're providing?
Right,
So it
so in
wouldn't just
case
be
you're going up with the scouts.
it wouldn't just be a personal trip to church.
Now, attending church is not things, but it'd be something outside your normal things. Like I said, I was a high council speaker, so I did that. I'm kind of sad that I made that comment about dry council because it's being recorded. Remember, yes,
What did you mean by using your home as a tax deduction?
just the interest payments are tax deductible. And you can minimize taxes owed. You know what, realize you want to maximize long-term capital gains. So I did the right thing with my daughter in that custody account where I just put the money in and then I just left it there. So realize long-term capital gains are taxed less than ordinary income. So, and it can be 20% less, or it can be 28% versus 15%. So if you can use a buy and hold strategy. Stock dividends. Why are stock dividends taxed less than bond interest? Or are they taxed less? What's the tax rate on preferential dividends or qualified dividends? Yeah, 15% if your marginal tax rate is 15% or zero if it's less than that. So there's a preferential tax rate. Again, buy and hold strategy on financial assets because you're deferring a lot of the taxes until you decide to sell. And then once you sell it, you realize those. Number 3, tax-exempt income, tax-free investments. So for example, municipal bonds are federally tax-free. If they are from your state, they can also be state tax-free as well. Medical savings accounts, use that pre-tax dollars for your medical things. And again, donate to charities with appreciated assets. And then the last one is either defer taxes in the future or eliminate all future taxes. You know, you investing in your 401k, traditional 401ks, traditional IRAs. You can eliminate future taxes by using a Roth vehicle. Using the Roth IRA. So what's the difference between a traditional retirement vehicle and a Roth vehicle? Andrew?
A Roth vehicle is taxed now, and then you don't pay taxes on it when you cash out later.
Okay, so a Roth vehicle is taxed now, and you don't pay taxes later when you put it out.
You can also withdraw the principal from the Roth,
Okay.
tax-free.
Without penalty.
Yeah.
So I had a student this morning, he opened up his computer and he had a little 401k. He said, I'm thinking about changing this to a Roth 401k, a Roth IRA. He had just left the company. What are the decisions, what are the questions he should ask whether he's deciding whether to do a Roth or traditional? I think we're getting a little bit ahead of ourselves. But, yes?
If he's going to roll it over into a Roth, can he afford to pay the taxes?
Can you afford to pay the taxes now? So that's one. Can you afford to pay the taxes now? Will you do okay without the tax benefits? Do you think tax rates are going to be higher in retirement? How many people here think tax rates are going to be higher in retirement than they are now? I'm losing all these child tax credits, and so my tax rate's getting a lot higher. Will you need to take money out before retirement without penalty, without taxes? And the one that I think is the coolest, do you want to save more money for retirement? Why does a Roth allow you to save more money for retirement? Why? Because it's the same numbers. It's the same numbers. Go ahead.
Yeah, I mean, there's a limit on 401k or IRA contributions.
Right. But how
And
can
so
a
if it's
Roth?
so Roth, when you have you're contributing after tax amount,
Right.
and then you don't have to pay the taxes later. Rather
So-
than contributing a pre-tax amount, you do have to pay it.
So with a Roth, you're paying the taxes outside of the retirement, and that's the reason. Okay, so let me just let's do a quick problem, just so everyone gets a chance. Get some experience at doing your taxes. Okay, you got this couple. 4 children, 317, and 1 independent in college. If they're a dependent, can you include them as one of your exemptions?
Yes.
Yes. Okay, 5,000 to a traditional 401k, 2,500 to a flexible spending plan. You can deduct medical bills. I give you that percentage AGI exemptions. So here's your tax rates. So they've earned this. Earned income, interest income. Here's their mortgage, unreimbursed medical bills, unreimbursed job-related expenses, and tithes and offerings. So what I'd like you to do is we're going to fill out taxes. We're going to go first using a standard deduction. Then we're going to do an itemized deduction. We're going to compare the two, and then we'll do our marginal and average tax rates. Does it make sense? Okay, let's take about 10 minutes and we'll work on this. If you have any questions, raise your hand. If you've got your binders, I'll come by and I'll grade your binders for you, so you don't have to leave them with me. Okay. You need to get your nice picture. So I'm signing you.
Same thing.
Because when if you hand it in without this, I'll take it. Right now, the last thing you need is but Lindsay, you're the same way. Okay. But the good news is everything else looks good. I'll do about half now and half on Monday, so if you don't quite have it done yet, that's okay. If you want to be really lazy and you need some help with the tabs, I've already got the tabs for me. Okay, that's all right. So let's do the...
I think I need to fix my number.
This doesn't quite look like a binder.
No, I used the last one. I'll grade it.
Can you get me one?
Yeah.
And you need to put the tabs. And if you come by, you can find this.
Oh, really?
Yeah. Sure.
I'll let you know. Yeah, sure. No one can
Like that.
You come by tomorrow, bring that blank one, and then I'll print off some ones that you can just so just write on blank. If anyone actually wants to see the sheet, the whole sheet doesn't have somebody who's really nice. What does she charge? The last thing I want to do is have I'm not pass it off, and then it comes in with that at the end. Oh, okay. So that makes sense. All right, we'll do that. This is done. I always try to figure out where these two.
Like in between what you really need to. She's not doing enough, but doing my wife just doesn't get my office. She's like, she doesn't like it. She's on so she's like, okay, so all the people, you see what happens. Yeah.
Oh,
You take them,
This is without a risk.
You wanna know where it is?
My guess is the stock and
I know what you're talking about, but that's not what it is. That observation. It's actually way higher than we did both on the same day. It's 25. Oh yeah. It's way harder.
Right, these are for some AGIs.
I would say
Supervisors, okay, so from, we've got all the.
Okay, let's kind of go through this. And we'll see how we did. Okay, someone want to take me through the standard deduction? A non-accounting person? It doesn't. We can use accounting people. Do we have any volunteers, or do I pick on someone? Cal, you want to take us through?
I'll get you where I got to.
That sounds good. That's all we need to do. So, first of all, we start with gross income.
Yes, gross income. We had income of 80,000, interest of 10,000, assuming it was not interest income from municipal bonds.
That's right. It was taxable income.
Right, so it's taxable. So that was our gross income, so 90,000.
Of course, are there any exclusions?
Oh, exclusions for the those were. Oh yeah. Yes.
The gross income was 85.
There we
Okay, so
go.
above the line, it's your qualified retirement plans. In this case, it's 401k. Okay, Clark, what's the next thing? So, how do we get from our gross income to our AGI?
Okay, then we have our flexible.
So he's taking it for you. So that's good. Okay, you're doing good.
Yeah, I'm killing it. So we got take that out. And that should take us to our AGI.
The
Oh,
AGI,
yes, it does.
85.
That's right.
Okay, Clark, you want to take us from here? So what's next?
So then, you have all your, from AGI deductions, in this case,
Hold on,
they
can I
have.
just pause this for a moment? And I do not remember reading about flexible spending in the previous problem. I don't see it.
It's like,
I want to see it, so I can see it.
2,500 to a flexible spending.
Okay.
That was my favorite thing.
Sorry, I was writing down all the information on my screen.
No, your computers, I'm sure it's not that on that section.
Okay.
Okay, so get to 82.5. So what do we do next, Clark?
So, depending on whether we're gonna itemize, we're gonna use.
So we're going to do a standard deduction here.
Good, that's
Take-
fine.
Take our standard.
So we're gonna take the standard deduction as well as our personal retentions, there's 6 of those. So,
Here's our taxable income. Amy, how do we calculate our taxes based on our taxable income?
You gotta go to this table,
Okay?
and there's, what is it, 18,450?
Right.
Everything
10% above that.
is taxed.
And then 15% on the remainder, so you have, so they owe $6,000 in taxes, right?
Well, you got credits.
Okay, you got your credits. How much do you have on the credits?
13,000?
$3,000 in credits. So they owe about $3,000 in taxes. Okay? So you comfortable with that? Did you do this from a quiz? Yes. Good. You're gonna have to. Okay, let's talk about Rachel. Let's have you take us through this. We'll start from the same way. Flexible. We'll start at AGI. What do you do next?
Right, so I kind of go through the same process for the standard deduction will be.
We're doing itemized now.
Itemized? Yeah.
Zach can help you out there. I'm trying to remember.
I'm Zach, but
Okay. Sorry, I got mixed up. I thought it was Zach still. That's all right. Someone help Rachel out? So how do we calculate, what are her, she wants to itemize, so what are the things that she can itemize on her deductions?
Interest on her mortgage.
So she can do interest on her mortgage, tithing, job expenses above 2%. So can she deduct that entire amount there? Nathan, so what can she deduct on that?
I think $350.
Okay, and how much can you deduct on the medical?
$813.
Right. So medical expenses, so it's 9063 minus your AGI times 10%. So she can only deduct 813 on medical and 350 on job related. So now total deductions are roughly 17.5 minus her exemptions. Again, same thing we did before, taxable income. We look up our tax, 5218, subtract our credits. 2218. And you do this.
This is more of just a comment on the quiz. It was hard the last quiz because the information was on one sheet and you had to go to the other. Is there? I don't know if there. I have no idea how Learning Suite works. Is there a way to make
I'm
the
still figuring
information?
out how Learning Suite works here.
Is there a way to make it
Anyone have
repeat
some
on the?
suggestions on how to make that, you know what the options are? Just come and talk to me afterwards.
Because that would just make the quiz easier. I'm thinking like this in a quiz format. If it's like information's on one and I have to switch between pages, it would be a lot easier. So.
Okay, so now the other thing we ask, calculate the marginal tax rates and average tax rates on gross income. So what's the marginal tax rates? 50%. So again, that's the tax you would pay on each edition of the home. How about your average tax rates? So most accountants like average tax rate is your average tax paid on taxable income. I kind of like thinking, I like it on gross income. So just read how it's said. Yes?
Which will it be on the quiz?
It'll tell you on the quiz. So just read through it. Just don't be too bit too dogmatic. Don't read too fast. But we'll let you know here. So here we've got a 3.5 and 2.6%. So what recommendations would you make? So everything in this class, the purpose is really to help you, to help other people. So some of you work in the Vita Lab. Some of you have been doing taxes for years. But let's spend a couple of minutes just thinking through here, and then let's make recommendations that you would make to this couple to help them so they will pay less taxes in the future.
Can we go back to the
You want,
sorry, that's fine. Sorry.
that's all right. So let's take a couple of minutes.
Probably,
All of their expenses are getting back. I think it's here.
Yeah, I want to go.
And then you can do it's like the value of the repair or
income.
So, okay, sorry, my wife. We got rear end. Okay, so what can we do? What can we do? What recommendations do you have for this company?
Well, they can contribute more to their IRA. It should be 500. But I think since they're married, they can both contribute.
So they both can contribute. It's not just one. So they can do up to 11,000 in the IRA. Could they also do a Roth IRA?
Yes.
It wouldn't help them now, but it would help them later on.
This is a 401k though, and it's more than like 18.
Right? No, it's actually
Per person.
it's like 18, and then if you're part of the OGC, which is the old users club, like you could add an additional 6,000. That's right. None of you other things, yes.
I mean, this may not necessarily increase their overall income, but they could have more kids,
Have more kids.
reduce their
At
tax.
certain times, I think that's a good idea. And other times, I think it's not quite.
Once they have a child in college, that means their dependent can't take the credits and education they're
That's why
paying to. So if the child has any tuition or books, they should make sure they do that.
So if you have a dependent in college, your child can't take the credits for tuition and things like that, and they should be able to take those. Other recommendations?
I could think about whether they want to do a Roth or traditional because they're paying pretty low taxes right now.
Yeah, they're paying low taxes now. If you're paying low taxes, is that a good time to do the Roth? Yeah. So let's go back to those 4 things. Maximize income. Or maximize deductions. Keep records. Charity, deduct the miles they drive to and from charity. My view is that probably most of you guys do some type of service with charity organizations. Keeping records of those. Non-cash contributions. Keep records, good records of those. My wife and I, we have a folder that just says taxes. Every time we do anything that's tax related, we'll just take the receipt and put it right in there. And then come around April 12th, we pull it out and start keeping No, we're not quite that bad. So DI, goodwill, keep good records. Appreciated financial assets, you can contribute those instead of cash. What things can you pay for on a tithing slip that you can't pay for with appreciated assets? Actually, everything on that tithing slip you can pay for with appreciated assets. Again, with minimized taxes owed, again, pursue a low turnover strategy, basically a low tax strategy. Passive, low turnover mutual funds. Ideally, what you want is you want to decrease your turnover and you want to increase your long-term capital gains. If you invest in stocks or stock mutual funds, qualified dividends are taxed at a lower rate than interest income. Tax-exempt income. Again, if you have a little bit of, you could invest in some muni bonds, which are federal tax-free. Again, flexible spending plans, using that to pay for your medical expenses with pre-tax dollars. And we'll get a little bit more into the investment side here as well. You can defer taxes or eliminate them altogether. So available, you can use a Roth 401k or a Roth IRA, which, again, if you want to save more for retirement, they're much better vehicles. So, let me just share a few thoughts. for students. What are the things that I think is important for students to do? Number one, get organized. Again, that's really why I like Quicken, I like Mint.com. Anything there that forces you to keep records, because it's so much easier. Exactly.
So I just started really getting into Mint recently, and I realized that you can't like budget out for the next month. Do you know if there is a way to do that on Mint or not? I was just curious.
On Quicken, I'm not a Mint person. Someone who uses Mint.
Yeah, but the same thing.
I can't,
So
and
I
I can't
use-
do past budgets. It's just like just this month.
Right.
It's just kind of dumb.
So we think so.
I'm a Quicken junkie, so I prefer Quicken. Number two, keep your prior year's return. Actually, what I do about every third year, I would pay someone to do it, and then I just follow their example for the next 2 years. And then if you find someone, because generally find people who are good at what they do, sit down with them so you understand what they do. And then, I just say, once we think our taxes got a little bit more complicated, I just kind of base something down. 3, checkbook every year, good records. Even showing non-cash contributions. Keep records of non-cash donations, Desert Industries. And again, I like paying my Tyson offering. You know, if you have, the last one is spend your time estimating capital gains. So let's say if you're using mutual funds and you've got some mutual funds, you know how much money you've made in capital gains because you actually see it on your Quicken or your Mint.com. And what you can do is find some mutual funds that you have losses in and you can sell those. And then buy not the same mutual fund, but another mutual fund with the same asset class. And that way, basically, you can take advantage of the losses there to offset your capital gains to reduce your taxes. And then, if you can, pay your Tyson offerings with appreciated securities. We'll actually talk about how we use this as a rebalancing technique in your investment portfolio. But those are some things you can do. Okay. Taxes. Interesting things. Why don't we spend a couple of minutes and let's think about what are your takeaways from this. Again, you've got a digital dialogue box on Learning Suite. You'd like to keep some notes. But let's spend a couple of minutes and think about what are our takeaways from today's discussion. What are the things that are going to help me to help you to save that $1 million? What are some of the takeaways from today's discussion? We can help out. Andrew.
I was just thinking about how right now I'm poor, so I should take advantage of that by moving as many expenses to net, or as many like Roth IRA type things I can do now, so that I can push the benefits forward.
Because you're in the lower tax bracket, moving money into a Roth IRA is a great idea because the tax impacts are a lot less.
I was going to say, instead of letting taxes happen, make them happen. So plan.
Here's a question for you. Can you plan right now? If you've got a portfolio that has both traditional vehicles and Roth vehicles, could you plan a targeted tax rate in retirement? First of all, based on the numbers that we've seen today, how much could you earn and pay state taxes? Let's say you're barely filing Georgia.
They were almost making 90 grand.
Pardon me?
They were almost making 90 grand and they were paying 2 grand.
So if you're gonna pay 0 taxes, how can we figure that out? We're gonna pay 0 taxes? What's your standard deduction? 06. What's your married final jointly? How much for 2, you and your spouse? So you can make roughly $21,000 and pay 0 taxes. How about if you wanted to just pay 10% tax? What would your taxable income have to be? 18,450. So and then you add your 12,600 on top of that. Add 8 on top of that. So you can actually go roughly $40,000 and you're only paying 10% tax. So what you could do in your retirement account is you take that money out of your tax deferred vehicles first, and then any additional money you take out of the loan. So do you see how this can help us out a lot? Other takeaways.
There are more benefits to giving than I realized, like deducting mileage for callings and other stuff like that.
Mileage for callings. More benefits there too. And also giving to charities and giving clothes and things like that. Those are always important things as well. Eric, Arlington in the back. What were your takeaways today?
One of my takeaways was you should stay organized with documentation.
Organized.
So like we have a Ziploc that has all of our receipts from like 2013.
Okay.
We have no idea what to do with them. We just save them. It's a good idea to save receipts, right? And so just yesterday my wife said, do we want to throw some of these away or keep them? So anyways, just making sure you're organized with it so that it actually provides value to you.
Alec, what did you take away from today?
So not being a Mac.
Okay.
My
MBA perspective.
My big takeaway is just it's overwhelming, to be honest with you. Take a little time to get started at least, start collecting data, start collecting more information.
Mark?
I like how you kind of said at the beginning what tax law affects. And tax truly is everywhere. And so I think it's important to kind of understand that, now especially, as long as you start learning the tax law.
Zach, what you do the last one?
I like the idea of paying tithing with appreciated assets, and then as well, being organized is key.
And I like that idea too. Again, it allows you to. We use it. It can do 2 things. It can pay your tithes and offerings, and allows you to rebalance your portfolio as well. Let me just share a couple of thoughts. Number one, the takeaways that I think are important for me. Number one, you pay everything you owe and not a penny more. We're law-abiding people, but we only have to pay what's due. Number 2, understand the process. Ignorance is expensive. I paid $6,000 in what Dave Ramsey calls a stupid tax. Because I didn't know the code. So be willing to sit down and work with people who know what they're doing and sit and pick their brains to if they do it. Number 3, pay your tithes and offerings with appreciated securities. You eliminate the capital gains and you change your basis. So it's one of the few rules left. Thanks everyone. We can see you Monday. And if there's other, I'll be out of this corner here to check out.